Fundamentally, the oil situation has barely changed as no major news has yet come. The market is still awaiting Russia's final response to the price cap introduced by the West. This is the reason for growing fears of severe energy shortages, which in turn contributes to higher oil prices. Most likely, Russian President Vladimir Putin will sign the corresponding decree as early as today, if it does not include a complete ban on oil sales to countries that have joined the price ceiling. Oil prices will drop sharply below $80 per barrel. Otherwise, the quotes will gain strong upside momentum, and in this case, the mark of $90 per barrel will be just the first stop on the asset's long-term upward journey. In the meantime, Brent crude oil futures kicked off the new trading day with gains. As a result, the quote jumped above the $85.50 mark, but almost immediately pulled back down. If the price stays firm above $84, the benchmark will most likely resume its bullish run. Alternatively, it will go down in case the price returns below 83. The dollar-ruble pair is standing still around 70 rubles per dollar. Traders seem to have taken a wait-and-see approach in anticipation of Putin's decree on retaliatory preventive measures against its introduction of the Russian oil price cap. In any case, the first reaction of the Russian currency to the long-awaited decree will most likely be negative. The ruble is expected to lose value when down by market panic sparked by retaliatory measures, but later on, when market participants begin to assess the impact on the global economy, the ruble will start to recover. At least since February, all the counter moves taken by Russia have contributed exclusively to a stronger ruble. To continue its downward correction, the quote needs to fix below the level of 67.50 on the 4-hour chart, and the bullish scenario will be relevant in a case the price rises above the area of 71 or 72. Speaking of gold, if we put aside high market volatility, the precious metal has been holding steady around $1,800 per troy ounce for nearly a month. It was to this mark that the price returned yesterday. Notably, the assets' attempts to go above that level were much more modest than downward moves, and this indicates that gold has limited upside potential. However, each subsequent movement below that level was somewhat more insignificant than the previous one. That is, the momentum appears to be fizzling out, with the quote stabilizing at the above reference point. Such behavior usually precedes a rather strong and protracted movement in one direction or another. So it's time to think of which way gold will move next year. Given ongoing interest rate hikes by major central banks, the yellow metal will most likely spend the first half of the coming year losing value. And that's all for now. We wish you profitable deals. See our channel with a new video in a couple of hours.